Let me talk to you about the business use of vehicles and tax implications. So here's a synopsis I want you to really pay attention to. So the thing here is that when we talk about business use of vehicle, you need to understand there are different situations here. If you are a business owner and use car, and let's say you use a car for business purposes, you may be eligible for a tax deduction for business use of a car. That's pretty clear, right? Now, the thing here is that you can claim a business vehicle tax deduction on cars used 100% or partially for business. And if you use the car for both business and personal, you can claim a deduction on the portion that's for business use. Now let's talk about what does that really mean. Well, business use of car includes visiting the offices of clients. Yeah, this happens all the time. So meeting with suppliers and other subcontractors, picking up and delivering items to clients, driving to the bank for a business transaction. Let's say you want to get a business loan, or you want to get a business line of credit. Going to the store to pick up office supplies. Let's say you go to Walmart, or you go to Costco for a business transaction. Okay, and meeting with an accountant or a small business lawyer for business. So those are really important because the IRS is really stringent when it comes to that. So you got to always think about the vision that's really that's underlying the transaction or the commute. Okay, do not categorize commutes to your business from your home or personal errands as business use of vehicle. If you do this, you will invite an IRS audit very soon. So the thing is that you need to understand, it's all about really how you actually categorize your transactions and how you categorize your accounting system. So what kind of tax deduction can you claim for business vehicles? It really depends upon your business configuration. You may be eligible to claim one or both of the following tax deductions relating to a business car. So the first deduction is called buying a vehicle for business use tax deduction. So here we're speaking about section 179. And then we're talking about driving a business vehicle tax deduction. Okay. So when we talk about section 179, we are speaking about amortizing. And so I will speak about amortization very soon. Okay. So you only have two options: buying a vehicle or driving a business vehicle. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's talk about buying a vehicle for business use tax deduction. So here we're speaking about section 179. Okay, so this is an important element because every year thousands of businesses buy new vehicles for business use. So it's important to really properly account for that. So one type of tax deduction you can claim relating to business vehicles is Section 179. And so Section 179 basically, it's called a Section 179 deduction. Basically helps offset the purchase cost of business property, including vehicles, equipment, and machinery. So when you hear the term Section 179, this does not only apply to business vehicles, it applies to all kinds of business assets, especially what we call the fixed assets, okay? The property, plant, and equipment part of the balance sheet of your business. So this will be, again, vehicles, equipment, machinery, and so on and so forth. To claim a Section 179 deduction, there are a few conditions you need to actually fulfill. So you must purchase the vehicle for business. You must use the vehicle for business more than 50% of the time. 50%, okay? If you do a 49%, it doesn't count. It has to be 50% at least. You must only deduct the business use of the car. Only the business use of the car. So if you actually are running errands and other sort of ancillary things that relate to the car, you cannot deduct those. You must take the deduction in the year you buy and place the vehicle in service, aka when it's ready and available. You must understand Section 179 limits, such as the annual deduction amount limit. There is an annual deduction amount limit. You must reduce your depreciable basis in the car by the amount of the deduction. So basically, that's what I was just talking to you earlier when I said amortization. Really, amortization is not the proper term here because when we talk about fixed assets, we're speaking rather about depreciation. Okay, so you depreciate the car. You do not amortize a car. You basically depreciate something that is a fixed asset, and you amortize an intangible assets. And so this is important. Now, you also must not claim the standard mileage tax deduction in the same year. Okay, now to determine the amount of your Section 179 deduction, multiply the cost of your new business vehicle by the percentage of business use. So this is actually the amount eligible for the deduction. So let's say you buy a new car for, let's say, $15,000 and use 65% of it for business. Your Section 179 deduction will be $9,750. So in other words, $15,000 times 65%. Okay, so this is kind of a pretty straightforward to think of it that way. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about business use of vehicles and tax implications. Now, let me talk to you about what to know before buying a new car, because as we're talking about business use of vehicles and tax implications, you need to have a clear idea of certain things that you need to consider before you buy a new vehicle, okay? And before buying a vehicle for business use, you need to weigh the pros and cons. And although it may actually make you eligible for a Section 179 tax deduction and future business use tax deductions, you want to consider your additional expenses, because those additional expenses also have some kind of tax implications, because those expenses are not just there for operational reasons. They also have tax implications in the sense that they might reduce your tax your tax bill, if you will. So first, think about the upfront cost. The question is, can you afford to pay for the car upfront? Can your business rather afford to pay for the car upfront? If not, can you afford to take on more debts and have a new monthly payment? Because see, the thing is, when you actually take on debts, you can only deduct the interest. You cannot deduct the principal part of the debt. So when you actually get a business loan from Chase, for example, or Wells Fargo, you basically can write off the interest expense on your tax returns, but not the principal amount. So those are questions you have to think about in terms of liquidity, but also in terms of your operational, what we call operational suitability. Okay, so the upfront cost, and then let's talk about future cost. So after purchasing the car, you'll have additional expenses like commercial auto insurance, maintenance, and repairs. Now, those expenses are all deductible on your business tax return, not a problem. So whether you're filing Form 1065 or you're filing Form 1120S, Form 1120, or even Schedule C on Form 1040. Okay, that's if you're a single member LLC, for example, if you are a disregarded entity. So think about the upfront cost and think about the future cost. If you decide to buy a car for your business, research the type of vehicle you need and can afford, and make sure to buy through your business. To cut back on cost, you might consider buying a used vehicle. Keep in mind that you will not be eligible to claim tax deductions for depreciation if you lease a car. Let's talk about driving a business vehicle tax deduction. Okay, so the first tax deduction is buying a vehicle for a business. Okay, buying a vehicle for business use. Now let's talk about driving a business vehicle. So claiming a tax deduction on your business vehicle purchase is not the only way to lower your tax bill. You may also be able to claim a tax deduction for driving your business car. So self-employed individuals can actually claim a deduction on the cost of owning and operating a business vehicle. Keep in mind, though, that you or your business must lease or own the car, and you can only claim the deduction on the portion you use for business. What does that mean? Pretty simple. Let's say you use your car only for business purposes. You can deduct its entire cost of ownership and operation. I'm talking here about ownership and operation. Okay, remember this duality here. Again, do not include drives for commuting or personal errands. There are two methods you can use to claim the tax deduction. You have standard mileage rate, and then you have actual expenses. So you can actually you can use either or. So for both the standard mileage rate and actual expense methods, you can claim a separate deduction for parking fees and tolls. Let's talk about the standard mileage rate first. Okay, I want to really clarify this because this is something that a lot of our viewers get wrong. So under the standard mileage rate method, you can claim a standard amount per mile driven. And so the IRS sets the amount annually. So for this year, the standard mileage rate is 6.5 cents for business mile driven. So, but just remember that those numbers, that number rather, changes annually. You cannot use the standard mileage rate if you operate 5 or more cars at the same time. Very important. So if you have a fleet that has more than 5 cars, you cannot claim the standard mileage rate. You cannot actually use the standard mileage rate if you claimed a depreciation deduction for the car using any method other than straight line. If you claimed already a Section 179 deduction on the car, you cannot use the standard mileage rate. And if you took the special depreciation allowance on the car, you still cannot use the standard mileage rate, or claimed actual expenses after 1997 for a car you lease. Okay, so it's one of those things you have to pay attention to. So if you choose the standard mileage rate and lease your car, you must use this method for the entire leasing method, the leasing period. Boss, I want to quickly remind you of today's topic. We are having a conversation about business use of vehicles and tax implications. So now let's talk about the actual expense method. Okay, so basically under the actual expense method, you must actually determine how much you spend to operate your car for a business. So for the actual expense method, you can include the following costs relating to business use. So you have maintenance and repairs, you have depreciation or lease payments, you have gas, you have tires, you have oil, you have insurance, you have vehicle registration fees. Now, this list is not exhaustive. Maybe your car has, maybe your business and car have a different set of expenses. Well, no matter the strategy that you actually have, just make sure that your accounting is strong. Your bookkeeping must be strong. I'm talking here about having receipts. You need to have proper internal controls so that around accounting, especially the accounting and all transactions that actually will relate to the business use of the car. The bottom line here is that if you intend to actually write any expense off on your taxes, you better have a solid regimen of controls around bookkeeping and around receipt keeping. Because God forbid, if the IRS were to actually invite itself into your operations, you do not want to actually be thinking about, I wish I had kept those receipts. It's very important. So you want to make sure that your accounting is solid, and also please make sure that you only use one credit card account, or one debit card account, or one checking account to actually record or to charge off all those expenses. That way, come year end, the bookkeeping, the accounting, the data gathering will be a lot easier for you. Let me really dig a little deeper here, because it's something that we actually got a lot of questions on. So I just want to elaborate a little bit. So I want to give you a few tips for claiming tax deductions for vehicle expenses. Your business car can be a great way to lower your tax bill, but before claiming the tax deduction, there are several things to remember. First of all, as I just said, you want to keep excellent records. So record your business use of your car diligently. For example, keep a log of business miles driven, hang on to receipts for gas and repairs, etc. That way you can back up your claims should something happen. Okay, if push comes to shove, you have the ability to back up anything to substantiate all your expenses. That's number one. That's the first tip. The second tip is you want to determine your business use of car. Okay, so basically using your records, calculate the percentage of your car used for business purposes. This can be 60%, 80%, 90%, 100%, etc. You got to be clear there. You also want to find your tax savings with both standard mileage and actual expenses. In other words, you want to do a compare and contrast and see which option is, I would say, economically advantageous to you. If you are eligible to claim either the standard mileage or actual expense method for business car use, you want to determine your tax savings with both. That way you can choose the method that gives you the larger deduction, right? That should be actually the goal here. And the last tip I want to share with you here is that do not use standard mileage if you take the Section 179 deduction. Okay, it's either or. You cannot use the standard mileage deduction if you have taken the Section 179 deduction in the same year. Okay, and so instead, you want to use the actual expense method, being sure to show your Section 179 claim. It's one of those things where you have to really see what really works for you. The situation can be different though from year to year, because the bottom line here is that the IRS wants to make sure that you're just complying with the law, and also you also have to make sure that if there is any question that you have, please either consult with tax attorneys, an EA, an enrolled agent, or let's say a CPA, or you could just let us know in the comment section below, and one of our team members will get back to you. Okay, but please, when you ask the question, tell us where your business is located, the state and city where it's located, and give us more information. Now, before I close to this conversation, I want to say that I want to give you just a reminder. As important as your vehicle expenses are for reducing your tax bill, they are not your only business deductions. So the form you will use to calculate your net business income, Schedule C, profit or loss from business, has lines for several types of business expenses. And so basically what we have here is that we have common expenses for ride sharing, like for a ride sharing business include a phone, a wireless plan, passenger refreshments, parking fees, and tolls. Now, you may not have like a ride sharing business, that's for sure. Maybe you just have a regular business. I understand that. But I'm just telling you overall that you need to consider the whole list of potential expenses you can write off, right? Because the bottom line here is you want to be able to actually write off all kinds of expenses. One thing I need to say also is that it's all about maintaining the car also, because if you are able to write off expenses, the business use of vehicles off of your tax returns, you want to maintain the vehicle so that you can use the vehicle for a long time. Because when we talk about maintenance, we're speaking about depreciation. So you want to reduce the speed of depreciation of the vehicle. Okay, and one thing you need to also need to also pay attention to is that the IRS wants to see some kind of consistency. So if you say this year you actually wrote off $10,000 in business use of vehicles, you can't like next year write off like 30,000 or 50,000 unless there is an economic justification for that big jump. And this is the same thing if you were to reduce the amount of write-offs that you have. So think about consistency, and think about, most importantly, you want to think about substantiation. You got to be able to back up all the claims you have on the business use of your vehicles. Especially, as I said, if you have more than 5 vehicles in your fleet, then I would say the burden of substantiation goes even higher. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just quickly talking to you about the business use of vehicles. So I give you the synopsis, and then now I'm giving you the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.